Today we'll be discussing explosive AI-driven demand and semiconductor and IT infrastructure market expectations. So we'll start today discussing some trends we're seeing in the infrastructure market, followed by discussing market dynamics as it relates to AI accelerators, or as we may refer to them, data center GPUs. And lastly, we'll just touch on industry expectations for the future around primarily infrastructure. So again, my name is Ben Carbonell, and I'm a senior analyst with TBR, whose focus is IT infrastructure, devices, and semiconductors. And I'm joined today with principal analyst Angela Lambert, who has similar focus areas. Before we dive into the content that I talked about for today's agenda, I'd like to just spotlight a relatively new research offering that we've added to our portfolio, and that is the Semiconductor Market Landscape. So this report was originally launched in January of 2023 and provides a view of the evolving business strategies of leading fabless semiconductor companies and integrated device manufacturers. Broadly speaking, the semiconductor market is comprised of vendors in three main categories, which are fabless vendors. So these are vendors who design semiconductors but do not have manufacturing capabilities. That would include NVIDIA, AMD, and Qualcomm. Second would be fabs, who are not included in this market landscape, but those are manufacturers of semiconductors. So the primary one that everybody thinks of is Taiwan Semiconductor. And lastly, IDM, or integrated device manufacturers. And these are companies who both design and manufacture semiconductors. So an example of a IDM could be Micron and Intel, who are included in this market landscape, and Samsung, who is not. The report focuses on portfolio trends and vendor-specific strategies, as well as end market trends and implications. And in addition to the market-wide view of key developments, the report also includes vendor coverage around these 7 highlighted vendors that you see on your screen right now. Although the focus of today's webinar will be on data center GPU providers, the semiconductor market landscape also analyzes PC and server CPU market, the memory market, and then also the market for custom silicon, which is really growing. And one of the key findings from our most recent semiconductor market landscape, which published a couple months ago, was we're seeing the CSPs, or cloud service providers, continue to develop their own proprietary silicon as a way to sidestep vendor silicon and just to differentiate their instances from other instances. So with that, I'll turn it over to Angela to go over market trends in the IT infrastructure space.
Great, thanks, Ben. Hi, everyone. Happy to be here with you all today. So kicking things off with infrastructure market trends and how they relate to AI-driven demand. In the last quarter, really, last 3 or so weeks, we've seen a lot of infrastructure vendors announce their earnings for calendar Q1. And for many, it's really showing kind of this inflection point as some of the kind of really initial AI demand has started to pay off in terms of actual delivering on revenue. So if you look at the chart here on the slide, looking at these 3 server vendors, this is TBR's own modeled server revenue for the vendors shown. You see over the last year, revenue growth has been, in general, excluding Supermicro, negative in the server business, right? For Q23 is where Dell started to pick things up, but overall, we see that the inflection point is kind of starting here in Q1 and is going to continue moving forward this year, based on the demand for AI-enabled infrastructure, including server, storage, and network. So in terms of some of the announcements we've heard across across some of the leading infrastructure vendors in this space. We've seen Dell reporting their AI server shipments were up over 100% sequentially, so shipping 1.7 billion in AI server in 1Q. Their server backlog is 3.8 billion. That's up $900 million from the previous quarter. Similarly, HPE has an AI system backlog also in the 3 billion, so 3.1 billion, and they've delivered on 900 million in Q1, which is doubled sequentially what they had delivered previously. They also are reporting high AI systems orders as well at 4.6 billion, so more to deliver on there. As well with Lenovo, we've seen highlights that in their serviceable addressable market, they're seeing about 7 billion in terms of qualified server-related pipeline in Q1, which is up more than 50% from the previous quarter. And the proof of their server business, seeing some of the rewards of this, their revenue mix for AI servers has hit about 30% of their total sales. Supermicro, you see on this line chart, by far and away the most rapid revenue growth in this space. Revenue up about 200% in the most recent quarter at 3.9 billion. Their AI GPU platforms have represented more than half of their total revenue in the most recent quarter. So it's really undeniable in this space that the AI servers are having kind of a significant impact on the market at large and shifting what, in 2023 was a pretty rough environment in kind of the post-COVID era of extremely conservative spending. So I think from TBR's point of view, we're a little bit surprised at how quickly the shift has really taken place in a meaningful way that's impacting the actual top lines of all of these companies. I think one of the other things we'll see going forward with these companies is continued focus on their R&D. So that's work with partnerships, joint partnerships with NVIDIA, which I know Ben will touch on more, but it's also the required innovations within their own portfolios, like looking at liquid cooling, for example. These are much denser systems consuming much more energy and having much higher heat output. So liquid cooling will be one place, for example, where we're seeing R&D taking up far more budget than it had previously. And we'll talk about some of our expectations later on and how that is kind of impacting the profitability outlook right now as well.
Awesome. Yeah. Thanks for that, Angela. All good points. And yeah, that super micro growth has just been incredible to see. So on to our next subject, I'd like to talk about the data center AI accelerator market, dynamics, as well as vendor positioning. So of course, as we all know, NVIDIA continues to dominate the market in this space, and really they're challenged only slightly by AMD, and we're starting to see Intel increase its investment in the space. But really, I see AMD as a distant second to NVIDIA, and then Intel as a distant third behind AMD. So the reason for NVIDIA's domination of the market really has to do with three interrelated reasons. First, its first mover advantage, its developer ecosystem, and then also its diverse portfolio. So let's break those down a little bit. Really, the company's first mover advantage both has to do with its GPU hardware as well as its developer ecosystem. So rewinding a little bit, just to give some background on NVIDIA, the company was co-founded by Jensen Huang in 1993, and he founded the company with a vision to bring 3D graphics to gaming and multimedia markets. After a few years of development, NVIDIA actually created the world's first GPU, and that was introduced in 1999. That was primarily to enable gaming on the PC. The company iterated on its success over the years. After that, continuing to create new PC GPUs and bring those to market. And that's really where the company, really started to begin with its first mover advantage. So I'm going to jump right over to the developer ecosystem kind of first mover advantage piece, and then we'll circle back to AI accelerators. So with respect to developer ecosystem, Wang was really a visionary in the sense that he saw GPUs as being powerful and being able to drive general purpose computing on the GPU. And to enable this, he steered NVIDIA's investment for the development of a parallel computing platform to support computation directly on the GPU. And that's what is known as CUDA, or Compute Unified Design Architecture, I believe. And that was launched in 2007. Really, all CUDA does is it acts as a software layer that gives direct access to a GPU's virtual instruction set and allows developers to code directly for computation on GPUs. So this is like a milestone moment for NVIDIA, and really, I want to say even more so than the company's hardware, this is really what differentiates NVIDIA from AMD and then Intel, of course, as well. It's worth noting that AMD did create a competitive kind of alternative solution to CUDA with its ROCm platform, so ROCm platform, and that was open source, whereas CUDA's not. CUDA's coding specifically works with NVIDIA GPUs, or in what NVIDIA calls its CUDA cores on those GPUs, whereas AMD's vision was more open, as is Intel's. And when AMD launched ROCm in 2016, it came with a series of compilers, libraries, and tools, including a programming language to port CUDA code. However, investment in this platform was very limited in the beginning, and already there was many developers using CUDA. So again, that's really where NVIDIA established that first mover advantage with respect to building its developer ecosystem. So now that we've established that CUDA and NVIDIA started out with a leg up, let's fast forward to 2020, and I'll circle kind of back to the hardware piece. So in May of 2020, NVIDIA introduced its A100, which is still offered today. And it's kind of benchmarked when it was released, as benchmarked as kind of industry standard for a data center GPU, especially as it pertains to supporting AI and ML workloads. So we saw cloud service providers quickly adopt NVIDIA's A100 and NVIDIA's A100 systems, and that kind of started propelling NVIDIA to its leadership in artificial intelligence and machine learning. But later in 2020, AMD launched its MI100 GPU, which underperformed A100 in AI and machine learning workloads. So the company continued to invest, kind of wanting to take a piece of this market before it exploded. And in 2021, AMD launched its MI200 series. So it's kind of difficult to look at benchmarked performance between different GPUs, because based on their architecture, some might be better for certain high-performance computing workloads, while others might be better for AI and ML workloads, as is the case with NVIDIA. So really, I guess I'd say that in my view, the AMD's MI200 was pretty similar to NVIDIA's A100, maybe better for high-performance compute workloads, but less apt for AI and ML workloads. And 2 years later, or I should say a year later, in March of 2022, that's when NVIDIA announced its H100 GPU. And that's the GPU that whose supply has been so constrained that it drove the backlogs that Andrew was talking about a moment ago. That was a pretty big development, and in October 2022, H100 became generally available to the public, and it was really the company's flagship AI accelerator, as well as the industry's leading AI accelerator. However, none of this really drove a whole lot of revenue. Of course, cloud service providers were investing in H100s to update from their A100s to support AI and machine learning workloads in the public cloud. But the boom in AI really came in November of 2022 when OpenAI released ChatGPT. So we know that was an inflection point in the AI market. And if we look at timing there, the introduction of ChatGPT was in November of 2022, and that just came 1 month after the general availability of NVIDIA's H100 chip. It's also worth noting that OpenAI used both A100s and H100s to train its ChatGPT models, and that's something that it continues to do today. So that's where we saw NVIDIA really kind of turn into this company, the stock market sweetheart company, really driving all this technological growth. And that's the basis for NVIDIA's first mover advantage and kind of its longstanding, I would say, reputation as the industry's leader in artificial intelligence and machine learning. Lastly, just touching on that diverse portfolio piece, it's worth noting that NVIDIA acquired Mellanox in 2020, and Mellanox developed a lot of InfiniBand solutions. So we're seeing NVIDIA go to market with its InfiniBand networking solutions, and I believe, I don't know what year it was recently, Microsoft Azure selected InfiniBand over other Ethernet solutions to power some of its AI cloud instances. Additionally, kind of a differentiator from AMD is that NVIDIA offered these, what it was calling DGX systems, and something that it still offers today. I believe when it introduced the A100, it also introduced the third generation of its DGX system, and really that's a hardware integrated server hardware box, and it's really intended for the sale to CSPs. And that's a big differentiator, and we've seen that in these times where it's been difficult to procure an AI optimized server from your typical OEMs like a Dell or HPE, we're seeing or we're hearing that a lot of customers went for DGX systems, especially those cloud service providers. Moving on to industry expectations for the future. Of course, we're going to see Intel, AMD, and NVIDIA bring new cutting-edge AI accelerators to market. I believe Intel's Gaudi 3 is expected to be generally available in the third quarter of the year, while NVIDIA's Blackwell 100, B100, B200 are expected later in 2024. And I want to say AMD's MI400 series will be available in 2025. So again, there'll be probably little performance differentiation, especially between the MI400 series that AMD brings to market in 2025 and what I expect the performance is from the B100 that was recently introduced at NVIDIA GTC. However, what's going to keep NVIDIA on top of the market, again, is that developer ecosystem and that more mature CUDA platform. A lot of what I've read, what I've heard from developers is that the documentation with CUDA is much more, I'd say, complete than the documentation that there is with AMD's ROC-M, and that's a lot of what holds AMD back. So I think just personally that AMD really needs to invest quite a bit of money if it wants to displace NVIDIA, especially as it relates to ROC-M's capabilities catching up with CUDA. But I don't see that happening for quite a long time, and who knows if AMD will really ever have enough resources to invest to ultimately challenge CUDA. And that's really because NVIDIA is deriving all this revenue now from the sales of not only its GPUs, but also its software. So if we think about like something like NVIDIA AI Enterprise, they're generating a lot of revenue from that, and they're able to invest this revenue in the development of both their hardware as well as their software solutions and developer platforms. And I don't think this is, I definitely know that AMD does not have the same kind of resources to spend on that investment as NVIDIA does. And then if we look at the third competitor here, Intel obviously has, a lot of resources at its disposal, but I think Intel is more busy kind of juggling a few balls when it comes to their ambitions to be a foundry with Intel Foundry Services. They have to invest a lot in that, and then obviously at the end of the day, Intel is a CPU company, right? As is AMD at this time. So I think those businesses require a lot of investment from the company. So to compete in the CPU market, AMD must invest a lot to compete against Intel, and Intel must invest a lot to compete against AMD. While outside of that, NVIDIA's focus is a lot more narrow, and I think that kind of gives NVIDIA the edge right now and then going into the future. But with respect to industry expectations around IT infrastructure, Lenovo specifically said this, that it expects the AI server market to grow twice as fast as the overall server market over the next year and foreseeable future. That's something that TBR also sees happening over time, especially supported by some of those numbers that Angela spoke to earlier. However, we're seeing that the mix shift to AI server revenue is having a negative margin impact in the short run. So I don't know how many of you followed Dell's earnings, but the industry's reception of the market's reception of their earnings was poor, and it was really around this profitability aspect of the mix shift toward AI optimized servers. Dell does believe that it will eventually derive more profit from the sale of AI servers just because of higher attached services and software. But right now, is that attached services revenue-based builds due to the deferred nature of services revenue. They're not getting a ton of absolute dollars in services revenue associated with AI servers today. But as that builds, I think we'll see a positive margin impact as the industry and as Dell increases its AI server mix as a percentage of total server sales. Second, we're seeing a continued rise in unstructured data with all the data collected at the edge, and this is going to drive storage demand as well as, there's going to be pull-through for storage demand as AI servers are consumed and purchased by organizations and cloud service providers alike. Third, again, the AI servers and storage, that's going to drive networking demand, which is something that we've already seen. However, currently, I think we're in a little bit of a cyclical lull in the enterprise networking market, and that's just as customers digest inventory that was purchased in prior cycles. I think going forward, we see the networking market recover, and there's some big things happening, right? With HP still planning to acquire Juniper. I believe that's expected to close at the end of 2024 or early 2025. And we're seeing partnerships such as a partnership between Cisco and Lenovo, and we're seeing Cisco continue to really own that Ethernet space. Lastly, just kind of overall trend that I expect to see, we'll continue to see infrastructure OEMs partnering with these silicon providers. So if we kind of roll it back to that chart that Angela presented, where we saw Supermicro's growth well exceeding that of some of the other vendors, a lot of this had to do with Supermicro's modular server build. So Supermicro was able to integrate new components faster than its competitors and somebody like Dell into its platform. So they really took advantage in this kind of supply-constrained environment when organizations were rushing to get their hands on these AI-optimized servers. But going forward, I see that demand kind of moving away from Supermicro and more heavily toward your classic infrastructure vendors, your HPE, Dell, and Lenovo, just due to their stronger services and adjacent portfolios, including their software.
Thanks, Ben. Yeah, I would maybe add to just some of the forward-looking expectations. I mean, as you noted, the AI server market growing twice as fast as the overall server market seems, very feasible, if not even a lowball estimate of some of the potential growth we'll likely see. We have a very long runway ahead with the backlogs that have grown thus far, and based on the customer set that we're looking at right now, which is limited to service providers, hyperscale, Fortune 100, there's going to be a future wave that really decides how long this growth is going to continue for, right? So this customer base of companies with deep pockets is fueling this growth today. What remains to be seen, I think, in my opinion, is these other enterprises that are maybe a little smaller, mid-size, are they going to identify AI use cases and commit to investing those budget dollars as well once they've seen more proof points in the market? So I think that will be interesting for us to track as this year continues, and we hopefully see from the market, more proof points of this technology bearing fruit for those who are investing. On the profitability side, I would probably just add, as Ben noted, we're seeing negative margin impact in the near term right now in the AI server space. So there's a lot of R&D expense. And as Ben noted, the services contribution today is low. I think HPE's AI services was low single-digit percentages of their overall AI revenue that they reported in Q1. So probably less than 5% of the revenue is derived from services. And we will see that shift a little bit as Ben noted, as the revenue is recognized over time. I think one thing that may be tricky for vendors in this space is that, these GPUs are taking up a very large amount of the cost of these servers. And typically, there's probably in certain infrastructure, maybe 20% of the value of a deal could be services. If the infrastructure is at such a really high cost, it may kind of shift the balance for these vendors where it's going to be more challenging to deliver that same ratio of services to hardware given these high price points. And we'll see how vendors adapt to that. We're certainly seeing more activity on the rack integration, the delivery, deployment of these systems, helping customers get started and even maybe looking at some of the data aspects as well. So that will definitely be a shift over time that we're looking to track.
Great, yeah, and that point about GPUs being such a high portion of the cost of an AI optimized server really brings me kind of to another point that I may have forgot to mention, which is that AMD, I think I see AMD competing and maybe taking a little bit of share from NVIDIA just based on pricing. AMD's always been more willing to kind of compete on that price, and I don't think that's a space where we'll see NVIDIA lower its prices. So I think maybe we see a market shift, and that would be, years from now, a little bit of a market shift toward AMD, kind of with that lower value or that lower cost value proposition. And before we open it up to a question and answer, I just kind of wanted to preview an upcoming webinar. So I just want to say, don't miss our upcoming webinar on AI PCs. If that is on August 22nd of 2024, we'll update you on the current state of the PC market. We'll compare AI silicon or AI PC silicon from AMD, Qualcomm, and Intel. Currently, no Qualcomm-based, none of these next generation Copilot Plus Qualcomm AI PCs have shipped. However, AMD and Intel have shipped some of their processors, and PC OEMs have shipped PCs with their processors featuring NPUs. We've seen that occur already, but we'll have an update and a comparison on that. We'll talk about AI PC adoption drivers and inhibitors, and then finally we'll talk about PC market expectations. So keep an eye out for the invite to that webinar. Definitely going to be an interesting one. I know that the PC OEMs really see the AI PC being an inflection point and driving a large commercial refresh. So I guess that's yet to be seen, but definitely something that we'll discuss in August. And with that, we can start to answer some questions that you might have. So again, as Haley said, if you have questions, please submit them. Yeah,
Great.
I think we're good for Q&A.
Yeah, then I'll read some of these questions out and we can tackle these together. So first question that came in was, do you have a few examples of who are consuming these compute resources? So enterprises versus service providers. So I can share a couple thoughts on that, and Ben, if you have any, love to hear yours as well.
Sure.
So when we're talking about the customers consuming the bulk of these large AI systems today, I think definitely seeing a lot of cloud service provider customers. And when it comes to enterprise, I know a few minutes ago I said Fortune 100. Now it's probably more like Fortune 50 or a small subset of the enterprise market today that's consuming these. We've seen, so for enterprise examples and discussions, we've seen reports that telecom industry, we've seen purchases of these systems in that space. We've seen financial services is another example in the enterprise space where there's customers consuming this infrastructure. But then on the other hand, Supermicro is probably the best example of being pretty heavily weighted towards the service providers. I think at least 30 to 50% of the revenue was in that direction. But in talking about their NVIDIA-based supercomputer systems that are being delivered today, three customers. There's kind of three of their top customers purchased 1,000 of these NVIDIA supercomputer racks in this past quarter. So the amount of infrastructure going to a small number of customers is pretty staggering, right? Because 1,000 of these racks could represent easily $100 million at the end of the day. So that's just three customers representing that spend. So you can kind of imagine where those racks are headed to, I think. Ben, anything else you want to add there?
No, I think that pretty much covered it. I think in our, when we've been involved in these as well, I think in our discussions with customers on some of these AI optimized servers, we've seen a lot of them shipping directly to customers. And I would, venture to believe that mostly we're seeing enterprise organizations purchasing some of these infrastructure OEM offerings. Well, definitely kind of like I talked to before, some of those DGX systems, those integrated boxes directly from NVIDIA, I think those are appealing more to the cloud service providers. Although we do know that CoreWeave, the GPU-specific cloud service provider, did purchase a bunch of Dell's XE9680. I think that's their AGPU server, and we do know that they were purchasing those from Dell. So that's kind of another interesting point. Is kind of when we think about the GPU allocation. If NVIDIA is selling its own server boxes, I wonder how that affects kind of GPU allocations in a constrained market to some of the infrastructure OEMs. Of course, NVIDIA wants to maintain its partnerships, but it seems like incentive there is for them to put themselves first in line. But GPU allocations from NVIDIA is something that I've tried to dig in on my calls with different companies and customers, but is not something that ever get any solid information around.
Great. Okay. And this question I think you already touched on, so maybe just a quick summary. We had a question on why Supermicro is performing better than others, in this AI server space.
Sure. Yeah. So I think that goes back to the modular design aspects. I know that this is something that other companies are working on. I believe Intel's most recent earnings call, they talked about trying to have server designs be more modular. And I know this is something that Lenovo also works to with the company's manufacturing design capabilities that it has in-house. I would see Lenovo most aligned to Supermicro in the sense that they kind of toe the line between that ODM and OEM. But with respect to Supermicro's growth, I really think it has to do, pretty much 100% with the introduction of their GPU server line, which I believe was introduced about a year ago now, maybe a little over a year ago. And I think that's why we're seeing those wild year-over-year compares. I'd be interested to see how the company sustains, or if it sustains its growth, or at least positive growth, as GPU supply improves and as those year-over-year compares get a little bit more difficult with the company's GPU server line, being around for over a year now.
Makes sense. Okay. And last question before we wrap up here. How do you see customers' reception to the competitive AI accelerators from AMD or Intel?
Yeah, so I think that's a really good question. I think right now we've seen, everybody wants to partner with NVIDIA, and whether that's your service providers, ISVs, or IT infrastructure OEMs. I think they're all trying to stay open to partnerships with AMD and Intel around AI and their AI accelerators. But really, NVIDIA is just the industry leader, primarily having to do with its software and its hardware being about 4 or 5 months ahead of where AMD's at. Customer reception, I think, has been pretty weak around AMD and Intel. I know that just recently, sitting on HPE's most recent earnings call, they talked about diverting a lot of their investment toward bringing NVIDIA offerings to market. They do have AMD-based offerings in their portfolio, but really the focus, again, is around NVIDIA as it's pretty much consensus. It's well known that NVIDIA is the market leader, and it seems like customers are really looking for hardware with NVIDIA components, despite potentially costing a little bit more than what the rough equivalent would be with an AMD-based system. So far, I haven't seen or heard much about Intel adoption. I think that potentially with the introduction of their Gaudi 3 AI accelerator later this year, we might start hearing a little bit more about Intel playing in the space. But again, Intel definitely a lot further behind AMD and its Rock M platform with respect to the tools that it's giving its developers around computation on GPUs.